Welcome back again to our deep dive where we help you explore and understand businesses.
Sounds good.
You've handed us a steaming cup of information on Starbucks, and
Yeah.
we're ready to break down what's brewing with this global coffee giant.
All right.
Sounds good to me.
Yeah, it's fascinating to see how a company like Starbucks, so ingrained in our daily routine,
Hmm.
is navigating these turbulent market waters. I mean, they're not just selling coffee, they're selling an experience, a third place between work and home.
Absolutely. But before we get into their current challenges,
Sure.
let's start with the basics.
Okay.
What exactly does Starbucks do, and how big are they really?
Well, think global reach. Starbucks isn't just your corner coffee shop.
Okay.
They operate across three main segments: North America, international, and channel development. They roast, market, and retail coffee on a massive scale, offering everything from, your basic brewed coffee to elaborate frappuccinos,
Right.
ready-to-drink beverages, food items, and even whole bean coffee for those home baristas.
Okay, so they're a massive player in the coffee world.
Yeah.
But we've heard whispers of trouble in paradise.
Uh-huh.
What's the good news and bad news surrounding Starbucks lately?
Well, the news is as blended as one of their frappuccinos.
Okay.
On the one hand, their recent earnings and revenue reports actually exceeded Wall Street's expectations for the first quarter of fiscal year 2025.
Really?
Yeah, their international same-store sales also performed better than anticipated, even with a smaller than expected dip in China. And get this, sales actually improved throughout the quarter as they dialed back discounts by a hefty 40%.
That's interesting, especially the bit about discounts. It sounds like they're trying to move away from relying on deals to attract customers.
Exact.
But I'm guessing there's a but coming here.
Yeah.
What's the less than stellar news?
You're right, there is a but. Remember the concept of same-store sales?
Yeah.
It's a crucial metric for retail businesses like Starbucks.
Right.
Basically comparing sales at stores that have been open for at least a year. It helps gauge whether a company is genuinely growing or just relying on new store openings.
Okay.
And here's the kicker. Starbucks' same-store sales have now declined for 4 consecutive quarters.
Oh, Jess. So even though they're beating overall expectations, they're not seeing growth within their existing stores.
Right.
That's a red flag, isn't it?
Right.
What's driving this decline in same-store sales?
Foot traffic, or rather, the lack thereof.
Oh.
Traffic to U.S. stores in particular took a significant hit, dropping by a worrisome 8%. This suggests that fewer people are choosing Starbucks for their daily coffee fix.
That's not a good sign. What about their financials? Are there any indicators in their PE ratio or debt-to-equity ratio that give us a clue as to what's going on?
Well, their PE ratio, which stands at 35.18, might seem healthy at first glance. But consider this. It's significantly down from a high of 106.15 back in 2020.
Wow.
This suggests a shift in investor sentiment, perhaps a growing concern about future earnings growth. Remember, the PE ratio reflects how much investors are willing to pay for each dollar of a company's earnings. A lower PE can signal that investors are less optimistic about the company's future prospects.
So Wall Street is becoming a bit wary of Starbucks' ability to deliver consistent growth.
Yeah.
What about their debt situation? How are they managing their finances in light of these challenges?
Their debt-to-equity ratio is an eyebrow-raiser. It currently sits at negative 3.47, which means they're using more debt than equity to finance their operations. A negative ratio like this isn't necessarily a death knell, but it can be a cause for concern if it persists over time. It could suggest they're relying heavily on borrowing to stay afloat, which could impact their flexibility and financial stability down the road.
Okay, so some mixed signals in their financial performance and a somewhat concerning debt situation. What's the outlook for Starbucks' future?
Where?
Are they in danger of losing their grip on the coffee market?
It's interesting how this all ties back to their Back to Starbucks initiative. I mean, they're trying to turn the tide by doubling down on their core strengths.
Right.
Quality coffee, a welcoming atmosphere, and a sense of community. But is that enough to win back customers and reignite growth in this competitive market?
You're right. We haven't delved into the specifics of this Back to Starbucks plan.
Yeah.
What exactly are they doing to recapture that magic?
Well, they're making some interesting moves focusing on both tangible and intangible improvements.
Okay.
On the tangible side, they're rolling out coffee condiment bars and bringing back those classic ceramic mugs to create a more inviting and familiar ambiance. They're even encouraging their baristas to add handwritten notes on cups.
Wow.
A small gesture aimed at fostering a more personal connection with customers.
It's like they're trying to recreate that cozy coffeehouse experience that made them so popular in the first place.
Yeah.
But can these seemingly small gestures really move the needle in terms of sales and customer loyalty?
That's the million-dollar question. Remember, Starbucks isn't just competing on coffee quality anymore. They're facing a landscape where convenience, price, and even social media buzz play a huge role.
Yeah.
They need to offer something unique, something that differentiates them from the countless other coffee options out there.
So they need to stand out in a crowded market. But let's not forget the internal challenges. They've announced layoffs in the coming months, which seems counterintuitive when trying to boost morale and improve customer service. How do they reconcile these seemingly conflicting moves?
It's a delicate balancing act. They're clearly aiming to streamline operations and cut costs. But they also risk alienating employees, particularly after recently expanding benefits like paid parental leave.
Yeah,
How this plays out will be crucial to watch. A disgruntled workforce can directly impact customer experience, which is something Starbucks can ill afford right now.
absolutely. A happy barista often makes for a happy customer.
Yeah.
But let's talk about competition.
Right.
How are they responding to rivals like Luckin Coffee, which is rapidly gaining ground, particularly in the crucial Chinese market?
Well, Luckin is a prime example of how the coffee landscape is evolving. They're leveraging technology, focusing on mobile ordering and delivery, and offering competitive pricing. Starbucks needs to find ways to adapt to this changing landscape while staying true to their brand identity. It's not just about being the biggest anymore, it's about being relevant and resonating with today's consumer.
It sounds like Starbucks is facing a multifaceted challenge. They need to recapture the hearts of their customers, navigate a changing competitive landscape, address internal challenges, and all while reassuring investors that they have a solid plan for the future. So what's the forecast? Can they actually pull this off?
Well, analyst predictions are a bit of a mixed bag, with an average 12-month price target of $105.48,
Okay.
suggesting a slight dip from their current stock price. But remember, these are just predictions. Ultimately, Starbucks' fate hinges on several factors.
What are the key things we should be watching for to gauge whether they're truly on the path to recovery?
Keep a close eye on their same-store sales figures. That's the most telling indicator of whether their efforts are translating into increased customer traffic and revenue.
So more people walking through the door and buying coffee, that's a good sign. What else should we be paying attention to?
Their stock performance is another key barometer. If investors believe in the back to Starbucks story, we should see their stock price respond positively. But they need to demonstrate concrete progress, not just promises.
Beyond those financial indicators, are there any other signs we can look for that might hint at their long-term success?
Absolutely. Watch their innovation,
Right.
particularly how they respond to evolving consumer preferences. Will they embrace new technologies, experiment with different brewing methods, or diversify their offerings beyond coffee?
Right.
The ability to adapt and innovate will be crucial to their long-term viability.
It's like they need to find that sweet spot between nostalgia and innovation, honoring their past while also embracing the future.
Exactly. They need to remind people why they fell in love with Starbucks in the first place, while also showing that they're relevant and exciting in today's ever-changing coffee scene. It's a tough balancing act, but one that's essential for their survival.
It's clear that Starbucks is at a pivotal moment. So what does this all mean for our listener who might be a coffee lover, a potential investor, or simply someone interested in business trends?
Well, it's a fascinating case study unfolding in real time. Starbucks' success or failure hinges on their ability to reconnect with their core values, adapt to a rapidly evolving market, and ultimately convince customers that they offer something truly special. It's a story worth watching, and we'll continue to monitor their progress closely. It all boils down to whether they can reignite that spark, that emotional connection that once made Starbucks a cultural phenomenon. Remember when getting a coffee at Starbucks wasn't just about the caffeine, it was about treating yourself being part of something bigger.
You hit the nail on the head. They need to recapture that sense of community, that third-place feeling that made them stand out. But how do they do that in a world that's increasingly driven by convenience and online interactions?
It's a challenge, no doubt. People's habits have changed, and the rise of remote work has blurred the lines between our personal and professional spaces. But here's the thing. I think there's still a deep-seated human need for connection, for a sense of belonging. And Starbucks, with its global presence and established brand, is uniquely positioned to tap into that need.
So it's about more than just offering a good cup of coffee. It's about creating an environment where people feel welcome, where they can connect with others, whether it's for a quick chat with a barista or a longer conversation with a friend.
Exactly. And that's where those seemingly small details come into play. The handwritten notes, the cozy atmosphere, the sense of familiarity, they're not just gimmicks, they're subtle cues that reinforce that sense of community and belonging.
It's like they're saying, hey, we get you, we're here for you, come on in and let's connect over a cup of coffee. But that connection needs to extend beyond the physical space, doesn't it?
Yeah.
What about their digital presence and how they engage with customers online?
You're absolutely right. In today's world, a brand's digital footprint is just as important as its physical presence. And Starbucks, to their credit, has been investing in their digital platforms, particularly their mobile ordering and rewards program. But they need to go beyond just transactional interactions. They need to create a digital experience that mirrors that welcoming, community-driven feeling they're trying to foster in their stores.
So think engaging content, interactive features, maybe even virtual coffee meetups or online communities. It's about creating a digital third place that complements and extends the physical experience.
Precisely. And that's where their innovation and willingness to experiment come in. They need to constantly evolve and find new ways to connect with customers both online and offline.
So it's a multi-pronged approach, recapturing the essence of what made them special, adapting to changing consumer habits, embracing innovation, and fostering a sense of community both in their stores and online. It's a tall order, but not impossible.
You've summed it up perfectly. The next few quarters will be crucial for Starbucks. We'll be watching closely to see if their Back to Starbucks initiative is just a temporary caffeine boost or a sustainable strategy for long-term success.
It's a fascinating story with implications that go beyond just the coffee industry. It's about the power of brand, the importance of human connection, and the challenges of staying relevant in a constantly evolving world.
And that's what makes these deep dives so intriguing. We get to dissect these real-world business challenges, explore the nuances, and hopefully gain some insights that we can apply to our own lives and careers.
Thanks for joining us on this deep dive into the world of Starbucks. We hope you found it insightful and engaging.
Absolutely. And to our listeners, we encourage you to continue exploring, questioning, and engaging with the world around you. After all, that's what learning is all about.
Thanks for tuning in, guys, and I hope you really like our content. Please help to like and subscribe as always.